I don't speak Spanish very well, but we are going to be doing this presentation in both English and Spanish, and we have Gloria Glasgow, Celsa Stallworth, and Reginald Smith here to talk us through a lot of the financial aspects of learning the language of business. And so without further ado, we're going to start moving through those slides. Gloria, you want to take a second to introduce yourself?
Thank you, Catherine. Hello, everyone. Buenas tardes a todos. Gracias por estar aquí. Thank you, everyone, for being here and for having us as well. My name is Gloria Glasgow from the Hispanic Interest Coalition of Alabama. I'm part of the Economic Development Program at HICA. And my colleague, Celsa Stallworth, is also here, and we're going to be leading any questions or any comments in Spanish to our audience. Thank you.
And Reginald, do you want to introduce yourself too?
Sure. My name is Reginald Smith. I'm a managing director at Sabre Finance, and we are a non-profit lending institution, and so we kind of serve a couple of different capacities as a CDFI or community development financial institution. We're also an SBA micro lender. A little known fact about us is a lot of people don't know is right now, we're Alabama's only headquartered micro lender, and so so that's really cool. That's something we like to brag about, and we're super excited to be here today. And says that you have an awesome team of people that are really here to help you today. So I hope that you guys take advantage and ask lots and lots of questions, and we look forward to helping you all with this topic today.
So the importance of being located here in Alabama is that you have access to us. So while we're not doing physical one-on-one meetings right now, you can get us on the phone very easily. You can get us on Zoom very easily. So that's one of the benefits of having folks here in the Alabama area, in the Birmingham area specifically. We know the region, we know the markets here. Okay, so financial lingo. So what are we going to talk about today? So we are going to talking about money, right? Financial lingo is a language. We're going to be talking about money. We are just going to cover the two most important terms and kind of dive a little bit more deeply into those two terms, and then talk about tools and resources to take advantage of moving forward from today. Today is really just scratching the surface. It is introducing you to some of the support network that exists for you to get a hold of these aspects of your business. And a lot of them apply to personal finances as well. So you can really take these lessons home, you can take them to work, you can take them to the stock market if you're looking at investment strategies that way as well. So any questions so far? Feel free to drop it in the chat if you have questions. And since we have a fairly small group, 20 participants so far today, if you want to just unmute yourself and ask a question, this is what we're here for. Okay, so why do we want to talk about money and how, right? So you see a picture of Monopoly on the board there. Sometimes money conversations can be awkward, and so having the language to really talk through some important aspects about money demystifies different things. It allows us to benchmark and compare. It allows us to validate the assumptions that we're making moving forward so that we can really make progress. If you want to be wealthy, you have to understand how wealth is created and managed. So when we talk about money, there are lots of definitions, and we had, Gloria, Reginald, and I had many conversations about how to put this conversation together, because there are entire college courses and disciplines about money talk, right? Finance is a degree that you can get. Economics is a profession, and business is obviously an entire thing unto itself. And so what we're going to be focusing on in terms of how to talk about money is really the finance aspect of it, the management and creation of money and of assets and liabilities. Economics and business are more broad terms that we're not going to be covering as in depth. They could take entire hours of their own to discuss. So why do we want to talk about money? We want to talk about money when we're selling a product, right? If you're selling product, there's usually a price involved, or selling a service, there's usually a price involved. And so to disclose that price, you're talking about money, right? If you're hiring an employee, you're going to discuss the salary and benefits with them, or if you are getting hired, or if you want to get a loan or a grant. These are experiences that many people have had recently with the PPP and EIDL, in that they didn't know how much to ask for, how to calculate the right figures, and then how to use it. So it's important to talk about money often with the right people. So customers, employees, lenders, and your support network like us, like the Alabama Small Business Development Center, Sabre Finance, HICA, Operation Hope. So your banker, your accountant, your lawyer, your customers, your family, all of those folks are very important to talk about money with. And the bulk of this presentation is going to be on the how part, because why and who, those are pretty simple things. How, that's the real trick. And Gloria, please interrupt me when you want to clarify and, just translate. Okay, so the two terms that we're talking about today, assets and liabilities, the big difference between them, aside from the spelling, is that assets are any resource that is owned by a business or economic entity, and liabilities are a resource that is owed by a business or economic entity. So the difference is owned versus owed. And really that is the big difference. And so there are many subterms and things that can fall under an asset or a liability. There aren't too many things that are both, luckily. But when you think through these terms, the better you understand them, the more you'll be able to use them. And so when you think of, for example, if you own your house but have a mortgage, the part of your house that you own is the asset. The part of the mortgage that you have to pay off, that is your liability. These guys get it. So this is a podcast called Earn Your Leisure, and I think this is such an awesome sweatshirt. So their apparel is assets over liabilities, and I think that is a great, just let's wear it right on the outside and make our goals very clear that we want more assets than liabilities, right? Because assets are where the wealth is. Okay, so where do we find assets and liabilities? When we're thinking through the financial statements, and there are 3 different financial statements, assets and liabilities appear on one of them very, very clearly, and that is the balance sheet. So I've included a snapshot of a snapshot. So a balance sheet is a snapshot of a company's assets and liabilities. And here we're looking at Apple Incorporated, their second quarter. So this is their 2020 second quarter data, comparing it to last year. And so the top half of a balance sheet has the assets, and you can see that very clearly because it's called assets. And when we're looking through, there are a lot of things that are not called necessarily assets, but some of them are. So we've got current assets. Current means 12 months or less. So those are things that you can very quickly convert. So the category of current assets include cash, right? Because cash, you can immediately spend that. Marketable securities, those are things like stock. Accounts receivable. Accounts receivable can be, you're expecting to collect that money within a year, and so on. Non-current assets are things that are over 12 months or expected to be more in the long term. So you see marketable securities there as well. Those are things like CDs that have CDs and bonds that have a maturity date outside of the 12 months. Property and equipment, those all fall under non-current assets. On the bottom half of a balance sheet is the liabilities and shareholders' equity. Now, sometimes shareholders' equity is considered a liability, sometimes it is not. I'm not a CPA, and so these are really specific to what you're using these numbers for often. So some folks will say, yes, equity is considered a liability because it is money that is given to the company now, and you are expected to pay it back. Sometimes it's not considered a liability. But again, we'll see the current liabilities as a category and non-current liabilities. Current and non-current mean the same things here. Current is within 12 months, it's this year, and non-current is over 12 months.
Hey, Catherine.
What's up?
No, I was just gonna ask. I was asking in the chat. You know, I'm a real active. I like to be real active in the chat. And so again, this information is we talked kind of offline as a group, and I told him, I said, this one is kind of like eating your green vegetables. You know, it's like this is definitely not ice cream and cupcakes. This is the, you know, broccoli and kale version of business that we don't really talk about very much. And we don't want to make it laborious and boring. And so we want you guys to chime in. If you don't know what we're talking about, tell us. And so we can elaborate. You know, we want to make sure that this is, you know, this is rewarding, this is informative for you all. And so, but it is some real finance class type of things that we have to, but we want business owners to be able to talk about this, because a lot of times the theme of this is that business didn't come with, you know, a glossary or a dictionary or anything to inform you. A lot of our business owners that we serve were passionate about doing a specific thing, start generating revenue, but the actual nuts and bolts, the cogwheels of business, oftentimes is not, you know, taught. And unless you take a business course, you may not get that information. And so we're here to make that simple. So there's no silly questions. There's no such thing as a bad question. If you don't know what we're talking about, please don't just sit and listen to us, because we want you to walk away with your questions answered. So my question was, have you all ever seen a balance sheet? Do you know how to get a balance sheet? And so I'm going to go back into the chat, but I wanted to throw that out there that you can chime in. Again, this is a very small group. And so let's make it as, you know, as informal as possible so that we can get the most out of the session.
Absolutely. And I didn't go to business school. I have a lot of education, but I didn't go to business school. And
I can't tell.
so this took me a long time to really figure out, what are we talking about when we're talking about assets and liabilities? And because when I think of liabilities, I think of like that one friend that you're like, you don't lend them your bike. Not on a balance sheet. I wasn't used to looking at assets and liabilities in a spreadsheet form, even though I use spreadsheets all the time. And then one day an accountant said to me, it's like your checking account. It's like looking at your checking account, what you've got in your like for money, what you have versus what you owe. You know what debt, you know what bills you have coming up. It's the same idea for business. So creating a balance sheet, if you have QuickBooks, you can do it almost out of thin air, or another accounting software. So let's see if we can get some responses in the chat. Have you ever seen a balance sheet before? So again, no wrong answers here. If you still don't know what I'm talking about, definitely say that in the chat. Throw up just a yes or a no. Have you ever seen a balance sheet before? Awesome. I've got one yes. I've got a couple of yeses coming in. Well, it is always nice to get a refresher. Fantastic. I'm glad I'm seeing a lot of yeses. So this is really good. But for those of you who hadn't, it is not difficult to create them when you're using financial software. There are also plenty of templates online, and this is the whole reason that we are here. We're talking about one of the most underutilized financial statements. There's a lot of focus on cash flow projections, very, very valuable. There's a lot of understanding and focus on profit and loss or income statements, because that's kind of the fun stuff, right? Seeing where your profit is. It's not as fun when you have to make it all balance, right? That's not as exciting as seeing like a big fat profit margin. But there is so much value in understanding your balance sheet, and all of that comes down to understanding the assets and liabilities. And this is 101. So we're not talking about anything crazy. The only thing you need is really just some basic math skills to calculate the math that we're going to do today. So balance sheets really are just a snapshot, so you can run them on a monthly basis, a quarterly basis, or an annual basis to get these snapshots. Typically, you'll want to use them when you are applying for financing or when you're planning for the future. It's not something you need to look at every day. I would check your cash position every day, but I wouldn't run a balance sheet every day. Okay, so this is where you can find your assets and liabilities. If you haven't started a business or don't have access to a financial management tool like QuickBooks or Xero, or Wave is a free option as well, then basically what you want to do is you want to total what you own and what you owe, and that's how you can compare them. So really just addition and subtraction to get to those numbers, nothing fancy here. Okay, so let's talk about how to use these, right? Because using terms, right? If financial lingo is if assets and liabilities if this is all a language, then we need to be able to use it to communicate and to understand and to plan how we're going to move forward. And so there are three really critical ways to use assets and liabilities: to analyze efficiency, analyze solvency, and so solvency is more longer term, and analyze liquidity. And so that we're going to be looking at short term. We're going to be using that word current often there for that one. Okay, so I didn't include all of the different ratios that can be used to measure efficiency, solvency, and liquidity. So there are more out there, but this is really just an introduction to how exciting this can be, right? Because this is where wealth creation really happens. When we think about innovation in our businesses, often people think about creating whole new products. But innovation is a step-by-step, small change by small change difference in your company or in your life that can make a big difference over time. And so when we're thinking about efficiency, if you can run your business more efficiently than your competitors, that's a competitive advantage. So you could be selling the same exact thing. You could be selling the same pound cake or soap or whatever it is that you sell service-wise. If you can do it more efficiently, then you can be more successful. And so one of those is the inventory turnover ratio. And so this is a really good one for product-based businesses because it measures how many times the total average inventory has been sold over the course of a period, right? Remember that balance sheet is just a snapshot. So we're looking at, okay, if we had a snapshot from last month and a snapshot from this month, is our inventory speeding up or is it slowing down? Right now, we want to turn inventory as quickly as possible to get cash in our pockets because we need that cash for things like healthcare and rent and other costs that cannot be deferred, right? We need that cash to pay ourselves because I don't know what Congress is going to do about that extra $600 or, for the unemployment, but it's important to have cash right now. And so if your cash is stuck in inventory, we want to turn that inventory as quickly as possible. And so to calculate that, now we're going to get into a little bit fancier math, nothing too fancy though. We're talking about division. We're going to divide the cost of goods sold by the average inventory. Okay, any questions about inventory turnover ratio? Just drop them in the chat. Okay, similar to inventory turnover, we are going to look at asset turnover. So asset turnover calculates the sales as a percentage of the company's assets. So if you're sitting on a lot of assets, This ratio is effective in showing how many sales are generated from each dollar of assets a company owns. And so when we're thinking about investing in starting a brick and mortar or moving into a larger or smaller office, can you generate the same amount of sales with the same investment in that asset? So an asset turnover ratio, a higher asset turnover ratio is better. And the way to arrive at that is you divide the company's revenues by the total assets. All right, let's move into solvency. So
Well, I had a question. I was going to jump in and ask a question. I was going to ask for the asset turnover. Does this apply to, obviously we haven't asked, one of the questions I wanted to ask before I ask this question is, everyone put in what type of business you have in the chat. I think that will be very helpful for us as we're going through this these slides to understand what kind of company you have, so that we can give you some applicable, illustrations of how it applies directly to you. Because if you don't have inventory, like I see a nonprofit, nonprofit, you may not have inventory, so that may not be applicable. So understand. I would love Bernard to understand what kind of nonprofit you have. That would be perfect. But I think that helps us to really be able to understand who's out here hanging out with us today, and then also be able to see how beneficial these are going to be to your specific industry. So so thank you all. I see them. Thank you. This is perfect. Thank you guys for putting it in there. So let's keep rolling. But this is great. I'm really happy that we have a large diverse group that we have here. So this is good.
So thank you so much for sharing, and thank you so much, Reggie, for pulling those questions in. So when we're thinking about inventory and you're a service-based company and you don't have products, you want to think about your time in terms of inventory. How much time are you spending on casework or on client work? So for in the consulting area, you're really, the benchmark for consultants, and this is different depending on what kind of consultant you are, but the benchmark is really around 30% of your time is spent on client work, right? And so if your specialization is in providing that product, that service, you're going to be spending 70% of your time, or up to 70% of your time, on other things outside of what is really considered your inventory. And so that will help you plan to your marketing strategy, your sales strategy, and really the service provisions that you provide and how you structure the prices around them, so that you can say, okay, I do a project up to 10 hours is going to be $2,000 or something like that. It's a little bit easier to calculate inventory turnover ratio for product-based businesses, but it's still a really good efficiency ratio for service-based companies as well. Okay. Awesome. Solvency and liquidity are the big ones these days as we see more companies going out of business. And these two are talking about how much cash you need to survive, sort of your overall break-even point for the company. So a solvent company is one that owns more than it owes. In other words, it has a positive net worth. It has more assets than liabilities and a manageable debt load. So when we're thinking about what is a manageable debt load, we want to think about a couple things. Primarily the debt to asset ratio. So a debt to asset ratio qualifies the percentage of a company's assets that have been financed with debt, short-term and long-term. A higher ratio indicates a greater degree of leverage and consequently financial risk. This is a good one to scan through the stock market. Stocks often publish debt to asset ratios, and you can look at what companies are over leveraged. A lot of the big companies that dropped out of the Fortune 500 did so because they were over leveraged. A lot of companies that suffered hugely in the last financial recession in 2008 we're over leveraged. And so when we're thinking about taking on debt, right, if we're thinking about the repayment structure for the EIDL loan, we want to make sure that we've got a good understanding of what assets we have and what assets we can expect to collect on. So the calculation is your total debt divided by your total assets. What's up, Reg?
No, I was just gonna jump in. This stuff gets me excited. Okay, it might not get everybody else excited, but I get really excited about this stuff because this is where the rubber meets the road in business, and especially when you talk about funding. Okay, and so in my world, this is it. Um, I can go on for days about this, but I get super excited. And don't turn your mic off, Catherine. I wanted to ask you some questions. And so when I was and just for clarity's sake, when we're talking about leveraged and someone is over leveraged, we're talking about the fact that they have more debt than they can technically afford to pay. Would that be an accurate way to put that when you say someone is over leveraged?
Yeah, so I think of it, not coming from a business world, is if
Yeah.
you've got like a pallet of bricks. This is coming from my home life experience recently.
There you go.
You've got a pallet of bricks sitting on the road and you need to move that pallet, and you have a certain length of iron bar and you're trying to lever this down. You're trying to get something under that pile of bricks. Do you have the right leverage? If
Yeah.
you over leveraged, you're hanging on that bar and those bricks are not budging. You're like 130 pounds like me, a 2-ton pile of bricks is not going anywhere no matter how much muscle you put into it. So
Right.
that's what you want to think about in terms of leverage. Are your feet touching the ground? Do you have enough muscle assets to pull that down?
Right. And when we're looking at, and just to kind of wrap that and put this in perspective, because there's a lot of talk about loans right now. There's a lot of talk about PPP and EIDL and things of that nature. So when your business is being considered, always remember that that's the formula, part of the formula that's being used. We're, as a lending institution, most lending institutions, especially banks and credit unions and things of that nature, community banks, they are looking at whether or not you're solvent. They'll use the term solvent. They're looking at whether or not you can afford, can you lift this debt that you're actually going to try to apply for. What you're trying to do may be a fantastic idea and it may make all the sense in the world, but if on paper, based upon your previous year's tax returns of your business, or if you're new in business based upon the projected income that you're putting out there, is this actually going to work on paper? Does it work based upon data and the previous data and the things that we have? One of the biggest things, and I just can't get enough of talking about this, is the Alabama Small Business Development Center Network has a capital access team that helps you with that. They help you, and it's at no cost to the participants. They help you get ready to access funding. They'll look at your credit reports. They'll look at your tax returns. They'll look at what you're using, what you're paying out every month. Those are the type of things that you want to take advantage of so that you know where you stand. Yes, you can look at a balance sheet. Yes, you can look at your profit and loss statement. But when we put all of those things together, the tax returns, the balance sheets, what you're using the funds for, how much is it going to cost you, we start to see a broader picture, and now we start to see whether or not your business can lift that or not. So I kind of wanted to jump in and talk about that. That was but that right there is worth you guys coming, because that's a huge misconception. A lot of times when business owners look to get funding, they base it off of a lot of other things, like the business that they have coming in, the opportunities that are out in front of them. And a lot of times what we're financial institutions are looking at is they're looking at historical data. So you may have not had the greatest year. This year may be up and off and running, and you may be showing that you are on track to do 2 or 3 times revenue that you did last year, but the year prior is what they're going to base that information of. And then we can look at some current things, but I just wanted to share that. So thank you. I hope that helped.
Yeah, that's awesome. Thank you very much for adding that, because it is, I mean, obviously when we're running businesses, we want to do it so that we are increasing our own wealth, but also our quality of living. And especially for startups, what I tend to see is that they discount the amount that they are putting in. They discount the amount of work that they're contributing and not building an asset base or not generating that revenue. And it really is a balancing act. And balancing is, the balance sheet. A balancing act is an active, it's an active thing. And it's a crazy environment out right now. So we're on shaky ground. You're standing on one foot, trying to make everything balance, reaching for the stars to make all this happen, leveraging or using these efficiency, solvency, and liquidity ratios that are all based on your assets, what you own, and your liabilities, what you owe, is really going to give you that insight into your business to say, all right, I can't take this anymore. I need to do something differently. Right? Whether it's introducing a new product line, pivoting to online sales, taking a bigger look at the industry and market, maybe going from focusing on the city of Birmingham to the city of Mountain Brook, something like that, to focus on what are the opportunities that you can take advantage of? How can you increase that asset portion of these questions?
Got it. I wanted to ask this question to Gloria and Celsa, just to kind of piggyback off of that. What do you advise? Like, how do we start to advise a business owner from your perspectives when they find out that they're over leveraged? Because I think that's one of the real realities that a lot of our business owners face today. They realize, like, man, they're in this class and they're like, yeah, I think that's me. I think I'm over leveraged. What are you, between the two of you? Feel free to just kind of jump in there and share kind of what are your thoughts and kind of advice that you all provide around somebody being over leveraged.
Thank you, Reggie. Catherine mentioned at the beginning of the presentation to see this the same way you see your personal life, or in a similar way. So when we go out there asking for a new car or to buy a house, some of the things that the lender is going to consider is your ability to repay your debt, right? The same will be applied for businesses. One of the things that I would say is to start making an inventory, a checklist of your debt. Which one is greater than the other one? Which one can you repay faster so you can free some ability or some money to pay the other ones? There's some, one of the upcoming classes about credit building that we're going to be discussing some strategies for balancing that credit score. And that involved how I'm going to take into little chunks that big debt that I might have, and how is that going to impact positively my business or my personal life.
That's fantastic. Miss Elsa, you gonna jump in there?
Yes, thank you, Reggie, for that question. One thing that we've seen in the business owners in the immigrant community here in the Birmingham area is that they don't like debt. They don't like to owe. And I would say it might be even a fear of it. So let's say that they owe for a vehicle, for a business, or even a rental agreement. They will make sure that their cash flow and what they have in excess, that they're going to put it forth that debt. And that's because it's just the mentality of debt's bad. So I guess in our aspect, it would be more of, okay, let's see the benefit. Let's talk about your tools that you have available and how you can best utilize your cash flow to grow your business. And, you might have a low interest loan that this is why you decided this, lower interest loan, or, it's a rental agreement and you're using your balance sheet to see how much money you're coming in, and let's make a plan together so you can utilize all your tools. And like I said, it's just a different spectrum with what we see in the clientele and the entrepreneurs that we work with.
Just something that I would like to add in is your relationship with your banker, with your lender. When you have a solid relationship, you can talk to them to see ways that you together can lower the debt in the best way possible for you as a business owner or as a person.
Those are all really good points. And if you hear these points often, it's because these are so fundamentally important to your business. Having relationships with what we call as your bail team, because they can bail you out of really tough situations, your banker, your accountant, insurance agent, lawyer, having those strategic relationships with community organizations like HICA and Sabre and SBDC, so that you have somebody else that you can say, like, is this just me or am I freaking out? You know, is it my risk threshold that I'm worrying about $10,000 worth of debt, even though I'm bringing in consistently $20,000 a month? It depends, right? And so we can get an objective set of eyes and kind of help you take the emotions out of that, and develop strategies around what do we do next? Because debt is a part of life oftentimes. And if we don't think of it as a part of life, we don't think of it as a part of business either, and tend to discount both the advantages as well as the disadvantages that it can bring. So I showed this, the asset turnover ratio screen while Celso was talking about the fear of debt. And I'm not gonna lie, that was me for a really long time. I was sitting on, you know, almost $100,000 worth of student debt. Like, why would I want to take on anything else? But buying a car allowed me to get a better job so that I could pay off my student debt faster. So those are the kinds of things that, like, if you can use your assets efficiently, if you can use that loan efficiently and responsibly, and those are very difficult things to do, easier said than done by far, but if you can, and you have the help to do that, then it can really bump you up into a next level of doing business or quality of living. Okay. So the next concept that we're going to cover is liquidity. So solvency is kind of big picture. Liquidity is, do you have enough cash right now? Can you pay the next bill that comes in? And this is a very poignant topic for Americans right now, because what we're finding is that businesses and households are having a lot of trouble covering the next bill that comes in. During the last 10 years when we've been operating and talking to businesses, you know, healthcare bills in collections were a part of life for most of my clients, and that is really unfortunate. But having that debt over your head and then having something like the coronavirus, COVID-19 pandemic happen means that you are facing extraordinarily difficult decisions about what to spend your money on. And so those strategies that Celso and Gloria mentioned are extremely valid. I would encourage you to sign up for HICA and Operation Hope's upcoming seminar on credit management, household credit management and cash flow management. But for the business, really liquidity looks at a company's ability to use its available cash to pay its bills. This is a shorter term perspective. And so there are two important ratios that we want to look at with liquidity. The first is a current ratio. Current, that term is coming back again. That means within 12 months. So it's a very specific time frame. So a current ratio measures a company's ability to pay off its current liabilities. So that's the next 12 months of bills, with its current assets being cash, accounts receivable, and inventory. The higher the ratio, the better the company's liquidity position. Now, I just want to point out and highlight a contrast here. So for the current ratio, the higher the better, right? Because you've got assets in the top half of that piece. If we look at that solvency, we've got it flipped, right? So lower is better. We've got assets on the bottom. So higher doesn't always mean better when it comes to these ratios. The second liquidity measure is called the quick ratio. Now, current is within 12 months, quick is even faster. So this is not a term you'll necessarily see on the balance sheet, but it is an important measure and a really nice tool to see, okay, so if we are worried not about 12 months from now, like who can think about 12 months from now, right? We're worried about whether season is going to happen this year. Obviously, there are many more concerns than football season, but I'm in Tuscaloosa, so it's the talk of the town these days. So your quick ratio is going to look at much shorter term debt. And the difference is that it excludes inventories, right? Because there's no guarantee that we can move inventories as quickly. Some people are still spending, some people are not. Overall in the country, the spending is fairly down with a little bit of a bump last month, but people are worried again about the unemployment, about their futures, and about their future expenses. And so spending is depressed because of that. And so when we're thinking through the quick ratio, again, you see assets in the top part of that equation. And so we want to see a bigger number here. So quick and current ratios, the higher the better. Current assets minus inventories divided by liabilities. So what you own divided by what you owe.
So, I mean, that in and of itself is, again, it's such a powerful tool to use in business. But again, it's one of those things that, who has time to sit down and do the numbers on that, right? I mean, we're in a real situation. Catherine says I do, yeah. So we're in a real situation, and again, definitely take advantage of the Small Business Development Center. But thinking through that, that's a sobering thought. I don't have enough to pay everything that I need to pay right now, and so I wanted to kind of unpack that and ask, just pose it to the panel here. What do we do when? What recommendations, one or two recommendations, do we give to business owners when that's taking place? I mean, revenue has been stripped from business owners like we've never seen before, just due to them being forced to close or forced to not be able to do business. And so now that is no fault of their own. It's one thing for it to be, I had to do something or I had to pull back and I had to make a change on my own, but I was forced to close my doors. I was forced to stop selling my product or engaging with my clients. And now I'm short. What are some things that adjustments that these business owners could make to kind of offset that, the challenges that they've been presented with?
Gloria and Celso, you want to start, or you want me to start?
You can go ahead, Catherine, and comment later.
Sure. So the first thing I recommend you do is to take a nap. Like, you're stressed out, you're not going to be thinking clearly and creatively, and these solutions require a well-rested brain. So take a nap, be kind to yourself, and realize that even when we think we're in control, we have much less control than we think we do. And then take a long, hard look at what those current liabilities are and see what your current assets really are. Because oftentimes we have many more assets in terms of our skill sets and relationships and network that we don't take advantage of or necessarily monetize within our business. So maybe you don't know e-commerce, but you have a really wide professional network of friends and family, and there must be somebody in there that can help you refine your website to develop the e-commerce side of things. Think about, and the second thing that we've been working on is thinking about how traditional in-person services can be provided online and in a virtual context. Now, this is a really scary thing for many people to approach. I know that it can be comical to some customers that are not used to being like, what are you trying to say? How are you going to do this personal service online? But we, when we think about what people are still buying nail polish and personal care items, right? Because they're fairly low cost and they're something that make us feel better. People are working on home projects a lot more. Businesses are increasing their web traffic and increasing their online security. So think about how you can take advantage of and pivot your existing skill set to what people are now looking at either online or how people are doing business in the world today. So, you know, for our lawyers and accountants out there, having client portals is a must now. Doing, for anyone in the health profession, having those HIPAA compliant software and whatever certifications are required, up and down the list, pivoting to online services, because humans still crave that interaction. And we will eventually get back to in-person sales. But for now, to keep things flowing, looking at what your liabilities are, trying to minimize them, what your assets are, trying to maximize them, and just being really kind to yourself and your family and friends. Because if you don't come out of this, your business definitely won't. So you need to start by taking care of yourself.
Love it, Catherine. Amazingly put. I think on our side, that's what we've been seeing a lot, like taking care of yourself. We have that one-on-one conversation with our Hispanic entrepreneurs and see what their concerns are, what they're worried about, if they even have any concerns. Because at first they were like, well, I don't think it's not affecting me right now. You know, I'm good. But then they'll come back a week or two later and they want to discuss other options or what's going on. That we help engage their creativity to see, well, what do you think is going to help? And at that point, we get the opportunity to kind of guide them and show them about different ideas. Virtual commerce has been extremely popular. But at that, they will have doubts. They're like, well, I've never, posted a video online. How am I going to do it? They're shy about it. But together you can say, well, it is possible. Let's see what steps you can take. And that's where we come in. That's where we're going to help them take those steps. Quick example, a particular lady that sells cookware. And it's always been face-to-face. She has that social engagement, and she's just a firecracker when it comes to that. So when you told her online, she's like, no, I'm too old for that. I don't do that. However, now she actually is comfortable with the virtual commerce because she took those steps. What she does is she does some cooking videos. So she jokes around, I have to make sure that my kitchen is clean and it's presentable all the time because I'm going to film a cooking video when I cook something delicious. But that's just that process that they took. And yes, it took a little bit of encouragement and giving them the resources and let them know, hey, we're there, and promotion. But it's exciting when you see the outcome, when you see them engage and they come back to you. I thought I couldn't do it, but look at me. I've already done 3 videos and they're so excited, and you see, like, I'm doing better than even before because it's virtual. So that's just an example there.
Awesome. And, being virtual can open up a much larger market, right? So if your target market had just been Spanish-speaking residents in the Birmingham area, you could be selling now in Spain, right? Or taking those same dishes and building a community with Chilean chefs or home cooks in, Latin America, anywhere that there's or LA, anywhere that there's a Spanish-speaking population is now your target market, which is both, intimidating, but it also opens up a lot more potential. And so seeing that there may be a silver lining, being kind to yourself, identifying opportunities is really the recommendation that we give people. Reginald, how do you talk to folks about these aspects?
I was going to jump, but Gloria's mic is unmuted. So I was going to let her talk and then I was going to jump in.
Sure. Thank you, Reggie. Sometimes we are afraid to talk. and to say, hey, I need help. And I need to reach out to someone else out there that might show me a different way too. Now that we are in this virtual world, some people are getting tired of it. So people are, I'm getting, how do you say it? Sally, you might help me with the term.
They're exhausted.
Exhausted. Yeah, like Zoom meeting exhausted or something like that. And I saw in our group, there is a health coaching person. And going back again to building bridges and to building relationships, a lot of staff are getting tired of being just meeting in this virtual world, and maybe partnering with a company that have a staff that is getting kind of tired of being in this virtual world right now, providing some self-care strategies, self-care conversations for that staff might be an interesting way to explore how to pivot my business model.
No, I think I couldn't agree more with self-help. Taking care of yourself is paramount during this time. I was reading an article the other day. It was about advice from a sniper, like in the military, because it talked about how they have to like lay out in a specific area, hiding for a long period of time by themselves, and how they keep themselves mentally sane and things of that nature. And it's just a big thing. And but if I had to speak to that, if money's low, I think that one of the big things that I always try to live by is that you either look at your prices, you either raise your prices, you either get more sales at the same price, or you look at how you can buy smarter. Those are kind of the things. And when I say buy smarter, you may not have a product again. And I say tell people that, but you may find another way to use your time in a more efficient manner if you don't buy a product, because you're the product, you're selling you. But at the end of the day, you want to make sure that you're trying to level that out. Obviously, in this time, raising the price can almost look like price gouging people, So maybe we look at how do we get more sales in or more people connected to me. Doing that, I thought that was a brilliant idea. Doing a cooking show. I sell pots and pans and cookware, and now I'm going to do a cooking show to show you how well these pots and pans use. Why do you think QVC sells so much? Because people are sitting up there watching it and they're like, oh my God, I just messed the whole pot up the other day and they got cheese and it just wiped right off. I need one of those. I'm gonna buy it right now. Visual presentation and visual imagery is just huge in today's space. And so how many times have you been scrolling on Instagram, Facebook, whatever social media you're on, and you have somebody say, hey, stop what you're doing right now, because I want you to look at my page and do this, that, and the third. There's so much taking place and so much engagement, and you as an entrepreneur have to enter into that space, and we can help you do that. HICA, the SBDC, Sabre Finance, or any of the other organizations connected with Rebound BHAM, we are willing to help you to walk through that process. We have partnerships, we have resources that we can help you. Okay, well, maybe you don't want to do the videos. Maybe you create videos that don't have you on it at all, but whatever you do, you got to get in the game, because that's where the next wave is taking place right now. And we don't want you guys to miss out. So I would encourage you to look at who your target audience is and target them online right now, because there is no greater time than to launch some type of online aspect to your business to engage the clients that you want to engage for sure today. So that would be my piece of advice.
Awesome. I want to hone in on one aspect of what you just said, Reggie, and that is the biggest contributors to your profit margin. When we think of if you have $1, where you're going to spend it, the biggest contributor to your profit margin is your price, is the price that you set for your customers to pay you. Now, there are different sensitivities in this new marketplace that we're operating in, and so not everyone can raise their price without losing customers. The question is, which customers are you going to lose? Are you going to lose customers that only ever spend a minimal amount, but not the big customers If so, that might be worth raising that price. Cost is another aspect that's very, very closely related to your profit margin. And so decreasing your costs by purchasing smarter, and I'm not suggesting you tie all your cash up in inventory right now, but thinking through where you can cut your costs, where you can minimize those costs, and where you can increase or what services you can provide to increase your prices, those are going to have the biggest impact on your profit margin. Okay, I'm going to move through the next examples pretty quickly because I want to get to the tools and resources. So the next couple sheets are really their balance sheets for a common size. So this is from some software that we use to look at and compare and benchmark your finances to the industry. So this is the top half of the balance sheet, and what we're looking at is the percentage of each item in the column here compared to revenue. So for miscellaneous retail stores, their cash in the bank is 5% right now of their total revenue or total assets. But you can see a couple of years ago, it was nearly double that, around 9, nearly 10%. And so we want to think through what the trends are as well. And so this is the liabilities portion of the balance sheet for miscellaneous retail stores in Alabama making less than $1 million in sales annually. So this may be some of your target where you are. Most Alabama miscellaneous retail stores are generating less than $1 million. So if you're a retailer, you can look at these numbers and say, okay, am I carrying more debt than I need to or should be right now? How can I minimize that amount of debt? And then these are the financial metrics. So these are what we just went over. Current and quick ratios, those are the liquidity ratios. And you can see, remember, higher is better for those two. So 6.44, that's your current, is your assets including your inventories, and your quick is not including your inventory. And we can see, unsurprisingly, for a retail store, there's a pretty big difference between the current and quick ratio because retail stores have a lot of inventory. So these strategies that we discussed are particularly important for physical good retailers. Okay, so going over the tools really quickly. The balance sheet is your best tool to start with on these aspects, and you can generate a balance sheet in QuickBooks. If you use QuickBooks, you can go to reports and then just select balance sheet and it will run your report for you. There are also tons of spreadsheet templates, and if and when you need help, because honestly, sometimes these things get pretty boring, so you don't want to do them alone. If you just need somebody to stare at you at the other end of your computer while you sit down and figure out your balance sheet, schedule a call with us. I'm happy to multitask while you're multitasking. So I admittedly use Google Translate, so if I totally messed up the spelling for Los Recursos, or these are local resources and online resources and podcasts specifically in Spanish. So HICA, Sabre Finance, SBDC, Operation Hope, and various chambers of commerce, we all have Spanish resources that we can tap into. Like I said before, no hablo español muy bien, pero I don't know. So these are great local resources. Online, the SBA, FDIC, Lyft Fund, and Wells Fargo all have great resources, and the FDIC also has a podcast on money. In English, the local resources are the same. Online resources, we've got Coursera. Coursera has free courses that you can audit. You can also pay for them, but you can audit them for free. Investopedia has wonderful definitions of all of these different business terms and more. For benchmarking, Bureau of Labor Statistics has a lot of information. Their website is a little bit cumbersome. And then podcasts, if you get your kids involved. Kids are eager to, figure out how to use or earn allowance. And so Million Bazillion is a new podcast for kids, by kids, that talks specifically about money kinds of issues. Two Black Guys with Good Credit, Invest Talk, Brown Ambition, and Confessions of a Workaholic. I tried to focus on Black and Brown voices in these spaces because they are very much underrepresented. Good credit is a problem for all of us, though. Ambition and being a workaholic, those are all things that we struggle with. And the last one, Invest Talk, they have a really good educational podcast about investing. And your business is an investment. You're investing your time, your heart and soul, and of course your money into it. And so thinking through and learning more about how different companies talk and think through and strategize with their assets and liabilities, that's a good place to start. And then on YouTube, TED Talks are obviously a very good resource. The Budgetanista, Roberto Blake, and His and Her Money are really good YouTube channels to follow for how to budget, how to manage creatively your money, and how to generate creative new resources and sources for inventory, sources for revenue. And His and Her Money takes a couples approach. So obviously we don't, as much as we are, in a bubble because of COVID, we're often operating within our households. And so His and Her Money takes a good approach to working through some of those issues as couples. So we just got a question about receiving a copy of the slides and resources after the webinar. Yes, you will. Absolutely. And we are here to provide this and much more information. Really start wherever you are in your journey in business, whether you are $10 million or you have an idea that you'd like to form into a business, we are here. So these are HICA's contact information, Gloria and Celsa's contact information, as well as their website. So if you want to take a minute to jot that down. Reggie dropped his in the chat. So if you're joining us by phone, his email is info@sabrefinance.org. And that's SABRE finance.org. And his phone number is 205-264-8428. Again, his email address is info@sabrefinance.org. And his phone number is 205-264-8428. And here is my contact information. So Catherine Zobri at ua.edu, that's me. So I'm sorry for going a couple of minutes over. I do really appreciate your time. We really appreciate your time. Assets and we the speakers are very passionate about understanding financial terms and really starting with assets and liabilities moving forward. So thank you all so much for joining us today. We will leave this slide up for just a minute and then close it out. Please join us for our next seminar on Tuesday.